Good morning, you're watching One News Now Markets. I'm Danny Laurel. Now, before we delve into the equity space, here are the top stories of the hour. Inflation slightly eased in the month of February but remained elevated. Fresh data from the Philippine Statistics Authority shows that the country posted an 8.6% inflation rate last month. That is lower than the 14-year high of 8.7% recorded in January. The latest figure leans towards the lower end of the Bangko Central's 8.5 to 9.3% target range for the February inflation. The PSA says transport was the sole driver of the downtrend of inflation in the last month. Still, 9 commodity groups posted higher inflation, including food and non-alcoholic beverages, restaurants and accommodations, and alcoholic beverages and tobacco. Now, despite slower headline inflation, the PSA notes that core inflation rose to 7.8% in February from the 7.4% in January. Core inflation excludes selected food and energy items calculated in the headline inflation. Now, Fitch Ratings says Philippine banks are facing increasing asset quality risks. Fitch explained that this is still due to high inflation and the rising interest rates. The credit rater noted, though, that non-performing loan ratio is likely to remain steady at around 3.5% by the year end. This as risks are largely offset by the financial buffers of large corporate borrowers. Fitch said large corporate borrowers are in relatively strong positions to weather the higher financing costs. Now, that inflation print came in slightly lower than expected, but nevertheless still a painful pill to swallow. Here to weigh in on what this means for companies' performance, we have with us Ed Francisco, President of BDO Capital. Good morning, Ed, and welcome back.
Morning, Danny.
Sir, I mean, what to make of this print, no? I mean, it's lower than what we were expecting. It's on the lower end of what the government was already touting. Could have been much higher, actually. But at the same time, only transport went down. The food issue is still there. Plus, the core inflation has actually even gone up. As a market watcher, what's your take?
I agree. It's the only saving grace that it's a little lower than forecast, but it's still high. I guess from the monetary board, they will be scratching their head, and then they will probably have to increase rates fund, no? Because we had hoped that would be substantially a bigger decrease. That's the target. So we have our work cut out in bringing prices down. But what does that mean for the financial market? It's not going to be good. It's not going to be well received. So we will wait, hopefully, for the next month again to see if the other measures are taking effect.
Okay, now let's try to see how this feeds into your outlook on consumption. Is this something that immediately would impact our consumer staple stocks?
It shouldn't naman. We're seeing that, in fact, despite the high inflation, we're not seeing a slowdown yet. In fact, maybe that's the problem, right? So the consumer companies that we follow, that we talk to, they're doing well, they're growing. We're not seeing a slowdown there. Margins in some industries are a little high, but in general, it's okay. I think the wheat industry has been hit, but the others are okay. Some of the bread companies that we talk to have some margin pressures, but the rest are able to cope. So it's still positive. Sentiment is still good. So that's the saving grace. Except we have to see the measures of inflation really going down.
Okay, let's talk about a specific company here that just came out with earnings. URC, of course, a very staple company as well, but their net income was actually down 40% year-on-year to 13.97 billion pesos, but actually beat the estimates. Can you give us a bit more understanding of this company? They did mention consumer demand was robust despite the quickening inflation, but it's been moving sideways, very volatile year to date.
Yeah, no, of course they're in a challenging area, but I believe in Erwin Lee and the management team. I think they got hit by flour prices and wheat also. But the other areas were doing well, I guess, because of the open economy. So while I guess they had some cost pressures, and I when they say they're going to manage that, I know they're going to find ways to manage that. With the open economy and at least the improved consumer sentiments, I think they will do much better. So even from a price perspective, admittedly, I think the price went up a little bit, but it should do better. The consumer sentiment will be the key, but it's still positive. And then, of course, they're such a great brand. So we're hopeful that they will get these cost measures in place so that they will continue their uptrend in income.
Okay, let's move to DMCI with energy really in focus here. No, they missed estimates, but nevertheless still up 66. This is 2022, no, up 69% year on year to a record high. But this also comes on the heels of the demand for coal being high in terms of semi-rara, but they did see some lower real estate accounts, for example, a weaker on-grid for nickel and power. Give us an idea of whether the highs of semi-rara, the highs of this stock that was an exciting stock during the pandemic, still has room to run, or is profit taking already coming in?
Yeah, I think we're seeing some profit taking already. They will continue to be very profitable, right? But in fact, we were discussing it internally among our analysts yesterday, especially Semirara. I think we're lowering a little the price target for it, but it's still an increase, but not as high as before because I guess there's a slowdown in price. We're expecting a slowdown, and then again some of the plants had some were being fixed, I think. But other than that, and of course coal prices may be hopefully being stable, it's still gonna improve, but not as high as in the past. So it's not going to be the darling, but the fact that at least you got the DMCI group already is in the index, so that's also good. So from an investor, it will be good, but we're not expecting a fantastic build-up in the price anymore. But it's still a very good dividend yielding stock if you have it and keep it.
Okay, another one that I wanted to discuss is ICTSI. This is an interesting stock because it's of course linked to the global economy, the ports. No, what's your view now on this global recession story, the slowdown with China reopening, and how is that related to the story of ICTSI?
Yeah. Now, I guess there's the slowdown. The nice thing though is that when we ask also. I guess shipping prices have normalized already, right? At one point, they went up 10 times, 20 times. So it's normalized. So the flows are there. Because the supply side problems are being fixed. Unlike in the past, right? They were getting stuck, let's say, in the West Coast and empty coming back. I think it's being fixed. It's good for them. In fact, because we're working with them for their Terra, right? And we work a lot, of course, with the group. We're hearing very good stories. And of course, EKR, Mr. Razon, is very good in finding these opportunities. So building new ports. And I think they also declared a great cash dividend of almost, was it 10 pesos yata or 1 peso? So it's a good cash dividend also. So the investors in ICTSI have a good, I guess, diversification by investing in that. And I'm knowing how astute they are and how they manage even their liabilities. They have a great financial dashboard, which the ex-CFO shared with me, who is retired. But the new CFO is also great. So I think they're in very good hands.
If you look at this chart, Sir Ed, the past 5 years, I mean, the pandemic year, it's just gone much higher. Is this a defensive stock for you, especially since they're, of course, in countries, like Sudan, even, that might not be that affected, or that might possibly be insulated?
Yeah, that's why they're very good in that, di ba? When they took a dip, if you had bought during the dip, you made so much money already. Because they're very good in spotting opportunities, right? They've gone in areas where no one wants to even tread, right? That's Ricky's strategy. Iran and Libya and I guess Africa, because the margins are very good. But the nice thing about them also, I've noticed, they're also willing to cut losses. I think they were able to close a port because when there was really problem, they cut loss, but they diversify enough. So this should really be a good stock, and it's not a Philippine stock. It's really an international stock. So you have a diversification.
Okay, what is your bet on the rate hikes at this point?
meaning Fed and
No,
the Philippine
yeah.
rate
What should or the BSP do? What are you pricing in terms of their action after this inflation print?
Right. Yeah. I guess because the inflation rate is still high. At one point, right, they were signaling that they don't necessarily have to match the Fed increases. I think this just means now that they really have to match it. Otherwise, our inflation will not slow down. What does that mean, though, is that it means that hopefully they really want consumers to start slowing down in their purchases, right? So that the prices will go down. So that's the signal. That will also mean that cost of buying houses, it might affect real estate because the sales for condos, right, will are affected. Your capacity to pay will get affected. Your financing costs will get affected. We're seeing strength pa naman in the provinces, but more Metro Manila. But although some of our many of our real estate clients already have slowed down anyway, new launches in Manila. But
Okay.
it's even in places like Tuguegarao and Cebu and provinces, they're doing extremely well.
Okay, so watching out for what the BSP will be doing, and of course the rate-sensitive sectors there like properties and also bank margins, how that's going to pan out. Our index, however, up this morning, Ed, still
Wow.
above 6,700 despite this inflation print. Thank you so much for all your insights, Ed Francisco, President of BDO Capital.
Thank you, Danny.
That's it for this hour. I'm Danny Laurel. Join us again at 11:15 a.m. We are One News, all sides, all the time.